I like to find companies that are niche players. They have a very strong, defined role in their marketplace. If you do that kind of business, you basically have to go through Middle B. And there's a few reasons why that's important. One is it gives a company pricing power. Doesn't mean they are raising prices, but it means they can if they have to. A lot of times when we look at the revenue, we don't want to just look at the bottom line, but we want to look at the volume that the business is doing and also the price increase. We're seeing that now with an uptick in inflation. I also like to look at companies that have a consistency in their earnings and their business performance. Doesn't have to be. I understand some companies are cyclical by nature, but I like to see that consistently, the steadily rising line, the steadily rising earnings and dividends, all of that I like to see. I like to see strong operating margins. So that tells us how efficiently, I don't always have a magnifying glass on management, but if I look at their operating margin, that's a good indication that the company is well run and management is controlling costs and on top of things. So I never look at one specific variable, but rather a collection of many different variables that tells me a company has a competitive advantage, it's well run, and hopefully going for a decent price. And if you can uh, get over those hurdles, then you'll be a good candidate for our buy list.
Hey, it's Evan here. I hope you enjoyed this clip from our full-length interview. Don't forget, if you want to hear this entire episode with even more insights from our awesome guest, you can find it by searching the Smarter Trading Podcast in iTunes or on your favorite podcast app. You can also find all of the show notes for this episode by heading to thetraderisk.com/podcast. Thanks for tuning in.